As the brand new year approaches, everyone is making resolutions to get healthy and, of course, save more money. Here to tell us more about the 2026 financial outlook is the president of Wilsey Asset Management, Brent Wilsey himself. Good evening, Brent. Happy holidays.
Happy holidays. Good to be here.
Nice to have you here. I'm excited to talk about the new year. 2026, bring it on. Okay, we want to make money, we want to save money, we want to invest, but a lot of people are getting concerned because of inflation. What can you tell us about the outlook for inflation for the new year?
Well, it's so important to kind of have a plan going forward because you want to know what direction to go, and that's why we do these outlooks, which you can have a black swan come in and just destroy everything. But we start with inflation because inflation looks like it's be the same in the 2 to 3% range. No big changes there. Now we do have the tariffs that could come up again next year, and not that they'll be adding to them, but the Supreme Court is meeting in January, and they can either stop them completely, say they're okay, or do something else as well, saying, okay, President, we'll give you 6 months to get Congress approved this. So that can be a ringer that if they are taken away or added to or something, could change inflation. I don't think we'll see more new tariffs, but companies might try to sneak in a little more profits there, which could be a little inflationary. But I think 2 to 3% is pretty good. And then we can't forget too, and you'll start talking about this next month, the end of January, January 30th, the government could shut down once again. So that could be another problem for us as well. And we worry about things like this because it can change the whole dynamics. But I think right now, based on what we see, inflation should be 2 to 3%.
Yeah, we were talking about how it's changing dynamic. How will that affect jobs?
Jobs, we should have a decent economy, and that's the nice part. We don't see, jobs, a high unemployment rate. We don't see, a lot of jobs coming in, but we think we'll do well with that because we should see lower interest rates. We think they'll cut the Fed will cut a couple of times in the next year, bring us down about a 3.25 from about a 3.5 to 3.75. So that's a positive. Also, too, one thing people don't realize, and they're going to love this, next year there's about $50 to $55 billion more in tax refunds coming out to people because of the tax changes we come up with, and that's going to be positive for jobs. Also, too, if you buy a car next year, you get a tax deduction on qualified cars. Seniors over 65 get $6,000 more. So this is going to help stimulate the economy, and stimulate the economy should provide more jobs for more people. And again, it's not going to be a boom economy, but it'll be a good economy, so we shouldn't have any real negatives. But we should have some decent positives, all the money coming in, I think, for the first 6 months of the year.
Well, that sounds promising and very positive. So we went from inflation, interest rates, jobs, and now let's talk about investments. Many people are trying to save up and buy a home. How is the outlook for real estate looking? And are you finding a lot of your clients are investing in real estate?
Well, we did a segment a couple of weeks ago. We talked about the best place in real estate to invest is commercial office properties. And you got to be selective what areas of the country you work in. We do recommend you use a public REIT. Don't try to use a private REIT. These are very high commission products, so be careful. Residential real estate, I just don't see it doing that well. I think it's not going to drop dramatically, go up. And people say, well, gee, if they're cutting rates, isn't a positive? Well, you got to make the distinguish between short-term rates and long-term rates. Mortgages are based on a 10-year treasury, not what the Federal Reserve does. Now, you may opt out or opt in for an adjustable rate mortgage to get that lower, but that can cause problems down the road if rates rise. But I don't think we'll see a big drop in interest rates. I think residential will be okay. Not going to drop dramatically, but I would not say invest into it and expect big returns because we don't see that happening there. Best place again is commercial real estate because it's done poorly for the last 5 years, and this is only the third time in about 40 years that commercial real estate's been down more than 10% for the year. So there's some positives there. So like any place, pick and choose the right investment at the right time and get something on sale.
And how about equities and the stock market? Is it a good time to get that money that you are saving and invest it in the market?
It is, but you got to be selective. I mean, we know that technology is very high, still accounts for about 40% of the S&P 500. And you look at what you pay for something, and there's an investment called fear of missing out, where you're afraid of missing out. People don't want to miss AI. AI is here to stay, but it is so expensive. The average for the market is trading at earnings about 14 to 17 times. AI companies, technology companies, still trading at 30, 40 times. It's just way too expensive, anything negative. And we did start to see some cracks in 2025 that, oh, the debts are getting kind of high and maybe this is not working out. We saw some companies like Oracle take a big hit after, so you got to be very careful. Don't over-diversify. I mean, don't over-concentrate yourself into certain AI companies just because they did well. Look at what you're paying for something and what are you getting out for it. I mean, we love food companies. We love financial companies. They pay nice dividends. They're very good. So be selective where you invest.
Yeah, we're running out of time, but quickly I wanted to ask you about Bitcoin, gold, and silver. How's that looking?
Gold and silver is mostly, again, FOMO, fear of missing out. Everybody's buying, it's going to go up. Who knows what the price is? Could be $6,000 for gold, could be $2,000 for gold. Again, be very careful. You get sucked into it because it's done well. Same thing with silver. Bitcoin's going through a tough time. A company called Strategy, which is a big Bitcoin buyer, they said they're going to raise $2 billion to pay dividends and interest, not to buy Bitcoin. So some bad signs there. It may not be a good year for 2026 for Bitcoin.
Well, we've got everything covered.
I think we did. Very quickly.
Thank you so much. I hope you're feeling better, San Diego. Positive for the new year. We appreciate it. Always good to see you.
You're welcome. Good seeing you.